Well, good evening, ladies and gentlemen. Good morning if you're in the Southern Hemisphere with me. My name is John Needham. I'll be your host today as normal. And I'll start shift by thanking you for the prompt. Remember to turn on your microphone, John. Is it on? Can everybody hear me? Would you just type me a note, someone, and tell me if you can hear me all right? Yes, no, nothing. Hello? Well, you should be able to hear me. Let me see what's happening here. Why can't you hear me? Let's see. Oh, okay, thanks. Sage is on the ball. It's loud and clear. Hey, Sage, thank you, darling. Thank you also. Folks, what you're looking at here today is a latest FracSend chart, prepared, of course, by Sage, who keeps the records for us for our FracSend. Oh, here we are. Oh, good. Good morning, folks. Look. Everybody's lovely people. We should call this the Thursday Club, you know. I mean, it's just so nice to see so many of you here. A lot of you are old friends as well. Cool. Okay, thanks, guys. Great. Oh, there's Hank in Singleton. Yeah, I spent a bit of time there. Folks, this is the latest FracSend chart from Sage, who's a lovely lady in New Zealand, great friend of mine, as is her husband, Mustang, Daryl. Sage pulls out a FracSend chart for me to share with you, always for these webinars. So here you are. I figure today everybody is just happy, laid back, counting their money, rolling around in all the lovely wealth that we're creating. And if you're not, as you can see from the chart in front of you, you've only got yourself to blame. There was a pretty simple FracSend trade. It gets sent straight to your cell phone. You get a signal to buy. It gives you a text, says buy now and the market, and sell now and the market, and that's all you had to do. And there's 3,200 there, and that trade started last week and finished today. Well, that's pretty marvelous. Sage, thanks for that. Absolutely wonderful. So if you've all got your fill of that, if you're not a FracSend subscriber, get hold of Terry at support@thedanielcode.com, and he'll be happy to give you a free trial. Okay, so let's start. I've got 1,000 things to tell you today. I mean, you'd think we have a webinar pretty well every week that you know we'd be up to date, but we're not, and I've got 1,000 things to tell you, so we'll do the best we can to get through it all. I don't like to keep you more than an hour. I know everyone's got you know, commitments and timetables, but really, I mean, I could just talk to you folks for, you know, half the day at least. Probably more today because it's Friday down under shift, and Rolf in Melbourne, and we've got quite a few Australians. Daryl's here. I was going to say over there, but I'm in Australia now. Daryl K and Mossman, mate. So I'm having trouble remembering where I am. Peter Norton's over in Wellington too, New Zealand, enjoying his FracSend. Today, particularly being Friday, of course, it's middle of winter here at the Gold Coast, on the Pacific coast of Queensland in Australia. And it's about 23 degrees, so another couple of weeks we'll be swimming again. Anyway, let's move along. What you're seeing now is a short PowerPoint that I've put together. I just wanted to show you all the things that are happening here. There's an awful lot goes on at the Daniel Code that many of you are not aware of. The first point, let me make this, is that we have a number of different programs we run. We have the T.03 program, the Plus program, which is an extension of the T.03s. We have the Fourth Seal, we have FracSend, and they're all different programs. A lot of you people who are new to the Daniel Code sometimes sort of get confused which is which. So they're separate programs, and they're all independent. They're just different time frames, essentially. And I want to show you some of the stuff that's been going on that some of you don't see. This stuff is not particularly relevant to anything. It's just what caught my eye this morning. Here's the Aussie USD. Here's a T.03 signal that was posted for Thursday, which means because it's a T.03 signal, it's valid for 2 days. It's valid for Thursday and Friday, and it hasn't been elected yet. By being elected, it means it's got to trade above or below the high or low of the previous bar, which is a setup bar. In this case, it would have to trade below Thursday's bar. But the amazing thing, the point I want to give to you, is that these are the only signals I've ever seen that come early. And I've designed them to come early and spent many years trying to find signals that come early. Everyone knows what happened after the event, but I'm just making the point to you here that these are signals that come early. Here's another one. Here's the EuroAUD. There was the T.03 buy posted for Thursday, valid Thursday and Friday. Well, does it look like it's going to reverse? Sure does to me. Have a look at that. It's amazing stuff. Here's one of the plus signals. Now, there were 3 of these Euro signals, and they were all blue line signals. So they're not shown in the T.03 package because they're in the blue line package. That comes under the plus signals. Funnily enough, a lot of you don't have the plus package. You'll see from what I'm going to show you today that really there's an awful lot of money to be made from the plus signal. So I do seriously recommend that you contact Terry and get yourselves a trial of the plus signals. They're the sort of the mortar that holds the rest of it together. So there was a EuroGBP buy posted on Wednesday, valid for Wednesday, Thursday and Friday, and of course elected Thursday. Pretty nice, wasn't it? There's another one, the next one, EuroJPY. Same thing, blue line buy, posted on Wednesday, valid for Wednesday, Thursday and Friday. Now don't panic if you're wondering how long these signals are. So I'm going to show you the trade program for those of you that are not aware of it, and you'll see how it'll carry these signals forward for you. GBP Chief, this was a plus sell. That was posted for Thursday, elected Thursday. Nice enough. I mean, there's just money rolling in everywhere. This is one that I wanted to show you because today I want to talk to you about inside bars and outside bars. Now, outside bars, the point about them is that they're a bar that has a higher high and a lower low than the previous day. You must always take the stop and reverse on an outside bar, and that's always, always, always. I know a lot of people don't like outside bars. My friend Akhtar, I'm not sure if he's here today or not. He was a Daniel Code member for a long time and did a couple of there's a okay shift, thank you. There's a Belgian style delay to some of your charts. Yeah, I remember that. Akhtar hates outside bars in October. I think it must have been 2012. Perhaps we had about 18 outside bars on one day. Quite extraordinary. Anyway, here's one of the beauties of it, that what happens with outside bars is that a time signal is generated. A lot of the Daniel Code programs run on time signals. I think they're the only ones that actually do. Most programs I'm aware of run on price exclusively. And what happens is a time count is triggered and you get a time signal, but then a new force comes into the market and forces the market back in its original direction. Now, this is a buy signal that failed, but we still made money if you were following the Daniel Code protocol. So the little arrow there, you can see where the buy point was. You buy there, it actually should have been a little bit higher than that. And then you got the stop and reverse. Let me get my highlighter here so I can make things a bit clearer for you. So there you bought that high there on the plus buy signal, and as it went down through this point here, that was the definition of the creation of an outside bar, and you had to get short there. And you can see you got your money back, at the close there, and if you held it another day, you got even more money. You made a decent amount of money on that trade. So these outside bars, very important that you know how to trade them, you must always take the outside bar. Here's gold. Here's another one of those plus signals that if you're not getting the plus signals, you're missing out on a ton of money. So here we are. We had the plus sell on that little inside bar, as it turned out. Now with the inside bars, you automatically, they are a null or a void. Sometimes they're just waiting for time, but we count them as a null or a void, and you always carry that signal forward. So there was your sell. It was an inside bar, not elected, so you carry the trade forward and you got short the next day, and that would be in here. Okay, so here was your short. Now, talking about inside bars, you can sell the low of the inside bar if you want to. I know a lot of our more senior members do. But statistically, it's a losing proposition. Statistically, it is much better to sell the last bar that was not itself an inside bar. But you could have, if you want to, if you're a little bit more aggressive, you could have sold the low of that inside bar or the low of the previous inside bar. Either way, somewhere in here, you would have got short. In another inside bar, you still had to carry that forward because it's been elected. If you were using the DC protocol and not getting in till the low of the last bar that was not itself an inside bar, you didn't get elected on this bar because that entry at that stage is way down under this bar. But then inside bar, again, your signal's been given. It's been elected on the chart, but not elected because of our protocols, which means you had to get short at this low here. So either way, you had a nice trade in gold today. And that really is simply, honestly, a matter for your own judgment about, you know, how confident you are in your trading. But statistically, selling the low of inside bars is a losing proposition. Sometimes the setup bar before the inside bar is so big. Have a look up here is a really good example. This was a T.03 sell. There was the inside bar. This bar is so big that you couldn't really wait to take the trade down there, and then that makes the risk too big. So this is one of those instances where you really had to sell the low of the inside bar. And those of you who've done tutorials will notice this little inside bar is what we call a Needham inside bar. It's the wrong way. We've got a sell signal and the inside bar is up, which means all the floor traders have got long in that period. And if they're wrong, we're going to get a much bigger than average bar. And you'll see this again and again and again. When you get a sell-off an inside bar that's up, that is the close is higher than the open. That's a Needham inside bar. Have a little bit more on that trade because they tend to be substantially bigger than the average trades, as that one was. Here is the same thing. This is actually the silver chart. There wasn't a signal in silver. But this is what we call the correlated trades. Some of these markets are so correlated that you can sell, you can use the buy or sell signal in one market to execute in another market because they are so highly correlated, which means that they are substantially going to do the same thing, go the same way. And silver and gold are highly correlated. They're also correlated with Huey. Some questions coming in here. Oh, my friend Akhtar is here. Hello, mate. I'm going to answer all of your questions if you can just stay with us till the end. Akhtar, I'm here. Hello, mate. He's a good bloke, Akhtar. Okay, so some of these markets are so correlated that you execute in one market with a signal from the other. So here was our sell signal. It was a plus sell signal in gold. Executed, we can execute that signal in silver if it is elected, and there it is, and there was some part of $1,850 just for remembering what I've told you 100 times about correlated markets. The other markets that are highly correlated are the equities, Dow, Nasdaq, Russell, S&P, and the German DAX. Now I know they're out of sync at the moment, but better than 92% of the time they're in sync. So a signal in one can be executed in any other of those markets. Okay, so I hope you got that. Let's move on. Here was another one of our plus signals in T-bonds today. A nice pocket full of money. Actually, I'm going to show you what the plus signals are. There seems to be a bit of confusion about finding this stuff, but there's more money. We've had an enormous week, folks. Here's coffee. I wanted to just show you a couple of things and stress again. Here was coffee. We had a T.03 buy here. Up it went, up in here. We had a T.03 sell, 1 bar down. Now, remember, please, I've told you this for the last 3 weeks in every single webinar. A T.03 sell signal is automatically followed by a buy signal if it's elected, and that's because if markets are in a trend, you're only going to get 1 to 3 days down. So you count to 3, don't count inside bars. So this here is this T.03 sell here was elected, and that makes it 1 bar down. Now there are 2 probabilities. Either that's the top of a turn and it continues down, or the market's in a trend. It's easy to see after the fact. It wasn't clear at that stage. If it is in a trend, you will only get 1 to 3 bars down, which is why you buy that high. And that's an automatic buy. You don't need me to tell you. Right there, you are long again coffee. I've told you every week for the last 3 weeks. I'm going to keep telling you because these are really failure trades, and they're actually the best trades because the world gets wrong and we make more money. So remember that. That's an automatic buy right there. And you need to just really watch out for these failure trades because they're the best. Okay, here's our free trials page, folks. For any of you not aware of it already, you can have a free trial of anything at the Daniel Code. Contact Terry at support@thedanielcode.com. We can also get you a free trial of Trade Navigator charts and data if you don't already have it. And here's our compliance page, which I'm obliged to show you. And I do suggest you read carefully. There's all sorts of risks in trading, and these are just some of them. Okay, so let's move out of here. And let's move on now to some of the other stuff I wanted to talk to you about. And the first thing is, let's see where all these trades are now. Let's start here. Here's your Daniel Code website. In here are the T.03 signals, and you just need to click on that box and it'll bring up what the T.03 signals for the day are. This is another program. It's the T.03 signal called Plus because it has a lot more signals in it. And these, sort of intermediate signals that are the mortar that holds everything together. So if you're not getting the Plus signals, I suggest you contact Terry. Get yourself a free trial, and you'll just see a lot of additional trades that you're not getting now. The next point, once you've got to that stage, is you go to the trade program, and that's this document that most of you are familiar with, something I invented many years ago now. I just thought this was an absolute ant's pants when it was invented, but this is what you do. You just type in your account value, whatever it is, and your risk value, and I recommend you don't use more than 2% risk. And then you shift. I'm aware that this is Belgian time with charts. I'll wait till this changes. Here it is coming up now. And you'll see this marvelous program here. It tells you all the signals for today. These include the Plus signals, incidentally. You'd have to be subscribed to them to see all of this. And it tells you every market for which we have a valid signal today. So it's carried forward any signals that were there that are still valid and have not been elected. So that tells you all of them. And it also suggests to you the number of contracts you can take given your account size and this 2% risk. Now, don't forget that this has got Forex and futures in it altogether, so it understates the number of contracts you can take. So most of you are not trading Forex and futures, but you just pop in here however many contracts you want to take, and it says half. Let's round that up to 1, and we click the calculate total value sold, and after the delay you'll see that the total risk on your S&P contract is $500 on entry, and the total risk on your crude is $15.90, and together the total risk is just 5% for those two markets. So this is based on correlated contracts. You can see a lot of this is yes, 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 which means these markets are correlated. You can see EuroJPY is obviously correlated with Aussie USD and EuroAUD. So the program knows that, and it cuts down the number of contracts. When you get your free trial, you can use this, get used to it, and you'll see that it's very, very conservative. You can exceed these amounts as long as it's within your risk parameters. Now, folks, anything of this that you don't understand, please write to me. Let's move on now and have a look at this normal T.03 stuff. Just let me write, it's under contacts. It's under the contacts page, but okay, so J. Needham at thedanielcode.com. Anything you don't understand, please email me. I've had a few queries coming back from Jerry Winter, our broker, saying, he's got Daniel Code clients there, and I don't quite understand how to do this T.03 trading. And it's absolutely vital that you understand it. I mean, we get comments about it that are, people don't like it too much. They particularly don't like the small first target. And I have lots of people telling me, oh, the risk reward's no good. Well, you may know more than me. I doubt it, but you may. But we've been running this program publicly for 6 years, and we've had very long and lengthy trials of it. We've done it publicly with the live trade room with Dave Hunt. Many of you remember. We've had Terry running the Genie for 18 months. We've published all those results, and this market returned 6.5 to 7.5% a month, not a year, a month. So that's up around that 75 to 85% a year, and it's been doing that exactly for the last 6 years, no change. So this program is optimized for safety. You can start off for the newer traders, trading the rules, which we'll just run through with you now. But when you get more confident in your own trading, if you want to use some other stop-loss procedure, fine, go for it. I know the biggest bugbear is this first target issue, which I'll come to. Anyway, the chart we're looking at, if Belgian time has elapsed shift, that's a bit of an in-joke, folks. We had Frank DB, our Dealer Daniel Code member and a tutorial graduate, and he helped me with the fourth seal charts. He was doing a webinar for us at the last tutorial when we were in Waiheke Island in New Zealand. It was fabulous. Just agreed by everyone, the best place in the world to have a webinar. It was beautiful, it was wonderful. We pretty well had that half the island to ourselves. It was just great. Had a great team there. But when Frank was doing the webinar for us on the fourth seal, the internet was so slow that it was literally taking the connection from Belgium so slow. It was literally taking several minutes, maybe 4 or 5 minutes even, for the charts to change. So Shift was just pointing out to me we had a dose of the Belgian disease today that okay, right, more questions. I'm going to come back to all of these questions, folks, so don't worry, I'm reading them as they come in and I will answer all of them. All right, so let's have a look at this. This is the S&P. Let's get our trusty highlighter again. Spotlight they call it. This was a plus buy. You see this 1, 2, 3, 4, 5 days up. Nice trade. Plus, if you didn't have the plus signals, you weren't aware of it. Up it went. We had a T.03 sell here. Next bar was an inside bar. Means you carry the signal forward. You got short on this bar. 1, 2, 3, 4 days down nicely. Okay. Then we had the run up, and this is the setup bar that we're going to start looking at. The setup bar is the bar that creates the signal. If it's a T.03 signal, it's valid for 2 days, the day of posting and the next day. If it's a plus signal, it's valid. If it's a blue line signal, I should say, it's valid for the day of posting and 2 more days, 3 in total. And that's because I've designed these signals to come early, and they're the only ones that do. And then the daily signals need to be elected the day they're posted, but exercise a little bit of discretion with that, because those two sometimes can be elected the next day. It's worth just keeping it in mind. So this is the setup bar. So let me get back to my cursor here, and here we are. So we're going to sell the next day. The low of this bar, as you can see in the little banner at the top, is 1967. This is the S&P. It works. This is the mini S&P. It works in quarters. Now, we add a buffer to our entries, and for futures it's 2 ticks. For Forex it's 5 ticks. So the low of that bar, the setup bar, is 1967. We're going to sell at 1966.5. And you don't even have to do those calculations. They're in the trade program for you. So we sold right under here, and down it goes. Now, somewhere down and around here was the first target. We have a very small first target because we want, this is optimized for safety, we want to get rid of the risk early on in this trade. And at the first target, if you're trading more than one contract, you close off half your position and you move your stop loss on the other half of the position to break even. That means all the risk is gone, you've made a little bit of money, and you've got no more risk for the trade. And down it goes, and you exit at the first profitable close, which is way down here. It was a nice trade, very nice trade. So if you're only trading one contract, then at the first target, you just simply move your stop to break even. What happens very often and annoys people, but because they get emotional about trading, is you get to the first target, you move your stop to break even, the market comes back a little bit and stops you out, and then goes on to make a really big bar. Now, you know, that's emotion, that's not logic. Just keep thinking of the logic. If you trade this the way it's designed, you should be knocking out your 7 and 8% a month, which 70, 80, 85%. It's you can't get it many programs. So that's what I recommend. Once you're more comfortable with your trading and more confident, if you want to just let the market run down to its close, that would, you know, make it a 3 trade exit market on close. That's fine. It's your money. You do what you like. But I'm just telling you what the probabilities are, and particularly for our newer traders, I do recommend that you use this first target protocol. So down it goes. That's it. You're out of that trade. First profitable close. Now, here's what happens in the plus trades. We don't know whether this is a intermediate top or it's merely a correction in a trend, which is why the day after the sell we automatically have a buy. And here it is, and nothing's happened, it's not elected, the market runs back up, and that's 1 day down is here. Okay, so this was the high on the 16th. The next day, this is the Thursday last week, 1 day down. This next bar is 2 days down. It has a lower high and a lower low. We call that 2 days down. The next bar is an inside bar. That's a null. We don't count it. We're still 2 days down, and we're going to buy the high. Okay, we try to buy the high of the first day down. Nothing happens. We try to buy the high of the second day down. Nothing happens. The next day is a null. We don't count it. So we're long at the high of this bar, which is 1974 and 1/4. So we're a buyer at 1974 and 3/4. That adds our 2 tick buffer on. So we're long again in here, and up the market goes. We have got current blue line sell signals on the S&P. You can see it started to try and turn today. We'll see what happens. So that's the trading on the T03s now. Jerry told me, I talked about this last week, Jerry told me I wasn't mechanical enough. I hope you understand that. If you don't, please write to me, and I will either write back to you or put together a PowerPoint or something. It's absolutely vital. I trade this T03 stuff all the time, and I assure you it's an absolutely marvelous program, and we've been doing it for a very, very long time. You need to just get the hang of this stuff and understand excuse me, how markets move. Okay, let's move on. I wanted to then take you to T-bonds because it was a particularly nasty piece of market. Okay, here's Trade Navigator up to its tricks. You'll have to bear with me as I close it and open it. I don't know if many of you have these sort of problems. I don't have them very often, but it does happen. Fortunately, this will open fairly quickly. Shouldn't take much longer, folks. Just bear with me. So, Shift, you enjoyed Jesse, eh? Well, there was Todd. I think he's here with us. Toddy up in California sent me the most amazing video of this Jack Russell dog called Jesse. Quite extraordinary, and Shift has two of them, the hounds he calls them, and I sent it to him. Okay, we're back in action here, folks, and this is what I wanted to show you. Let's pull this all together. I think we're on the right chart, although we may have... Let's pull this together and I'll show you what happens with these markets. So let's scrunch up a bit of data here so we can see more of the market. And we'll just run through these sort of ideas now. This market actually, let's start way back here. This is March the 7th. This market actually entered a very strong trend here. And don't forget, we've got to put all this stuff together. We start off by using our Daniel Code trading channel. For those of you who don't know how to do this, have a look under the videos. There's a video just on creating these trading channels. And we use the regression tool, but the regression tool on its own is useless because it will keep expanding until it fills any market. The point is, you'll see the rules when you look at that other video. We have to have contact with 2 points on the upside if its trend is up, and 2 points on the downside if the trading channel trend is down. If you just watch this point here, I'll just put a little arrow on there so you can see more clearly what I'm talking about. Just watch the top of this bar. As this channel moves along, you see we've lost contact there. And if we move it one bar further, we've now lost contact here as well. So we don't have any contact on these first 2 points. That means it's no longer a valid trading channel. It becomes a regression channel, which is of no interest to us. So that's still a valid trading channel there. This market has run up all the trend of the way up, and it's then broken down through below one channel. Once it goes through one channel, here's your default setting, incidentally, folks. Anything to do with the Daniel code, 1.593 is our setting there. We can then put our second channel on. You can see this market breaks through the first channel, runs along here, tries to hold the second channel down, rallies back up. It's trying to get to the median, it can't, and it fails again. At this point, the market is in a downtrend, but here's your blue line buy that sends it in an uptrend. Let's get rid of those because that wasn't the main point. The main point was to show you what happens after these blue line and T03 signals. So let's lift this up a bit. You can see right down in here, this was either a T03 or a blue line buy, one of the two, and was not elected with the inside bar. Here's the issue. It was elected next day on the chart, but we didn't get into it because of our rule about the inside bar, but we got to buy it there. Okay, and as soon as we got to buy this thing, we start our count. There's 1 bar up. We don't count the inside bars. 2 bars up, 3 bars up. Any of those could have been the start of a counter trend, and we would have sold them. When we got to this bar, this was a T.03 sell. Down it goes. We're counting 1, 2, 3. Any of those would have given us a buy signal, but in fact we get down here. Now, this is where you use your Daniel code. This little fellow over here is called Dan the Hedgehog, and from any retracement like this, you just pull this down. You get this tool, incidentally, with the Daniel code library. So you just slap your retracement on, and let's see what we've got here. And there we are. There's another one down below that, the 89, which is commonly used. So this market has retraced almost exactly to a Daniel 59 number. If you don't believe that, have a look at it on the close-only chart, which should be changing for you in Belgian time now. So this market, don't forget, for Daniel code, target recognition is valid either on the high-low of the bar or on the close. This one worked on the close. You can see you've got almost perfect target recognition, close enough for our purpose, and that means, let me turn back, that this is what's called a hook. There was our sell, this was our buy rather down here, and that means that we can put a price level underneath that at that low, and for this sequence of the chart, any retracement above this level here is called the hook, which means it's a partial retracement into Daniel code retracement numbers, means you have to buy it. You buy it and up it goes, and you get this run up here. Okay, and so you just do that again and again and again. Let's show you another example. We'll get rid of that one there, and we'll wander along here. Here's your sell. Down it goes. Look what's happening with this stochastic. There's the buy off that bar, inside bar. It's not elective, but it is the next day. Up it goes, all the way up. Here's this idea I was telling you about inside bars. Do you sell the low of the inside bar or the low of the bar, the last bar that was not itself an inside bar? And you can see here, if you sold the low of the inside bar, which was 133.05, this next bar had a low of 133.04. You wouldn't have got filled anyway because we had our 2-tick buffer, but if you did get filled, it wasn't terribly clever. Whereas if you're selling the low of this bar, that's the last bar that was not itself an inside bar, you manage to stay long all the way up into here. And then same thing up here, you get a sell signal. That's a null signal. Down it goes. That's 1 bar down. There's the inside bar. That's the null. So this is 2 bars down, and you have to buy the high. And up it goes. And you keep doing that again and again and again. You'll get sell signals. You'll get T.03 sell signals on almost all these tops, or a blue line signal. This gap, incidentally, is the contract roll. I'm showing you the continuous contract, and down it goes. So let me look at this piece of the chart over here with you where it gets a little bit more complex. And I want you to clearly understand this. Here's your buy signal here, which means you can start by putting this line underneath the low. Okay, that low was over here is 134.15, so we're anything below, that's the failure point. We've got a buy signal, and that's the failure point. Once that low is taken out, the trade has failed. Now, occasionally, and I mean like about 4 or 5%, the market will stick itself through there, and usually it will reverse, as we see way up over here. But a close below that means the trade has failed. So there's your buy signal. 1 bar up, that could be a counter trend, so we have to sell the low, and we do. And down it goes, and there's selling from the low. There's 1 bar down, 2 bars down, 3 bars down. You have to buy the high, and up it goes. Now, this is really messy in here, and no matter what you do, you lose money. with this outside bar up here. It doesn't get elected. 136.05 is that high. This is 136.06, so our 2-tick buffer saves us, and we think you beauty, but we get whacked the next day anyway. But don't worry about that. If you stick with the markets and get as close to them as I'm showing you, they will eventually give you a reward. So there's your count. There's your buy signal. That's a plus buy signal. 1, 2, 3, 4, 5 days up. Made a good bit of money. There's a T.03 sell the day before and a plus signal on that day, and down it goes. And here you can see how it's broken this low but recovered very quickly. And this was a T.03 buy signal. Inside bars and null, you carry the signal forward, boom, off it goes. So this is what you need to do with these plus signals, is follow this sequence of trades that come after the T.03s and the blue lines, and that's how you maximize the returns in your trading. And very important that you can stay with these markets. Stick with the T.03 protocol to start with. As you get more confident, move on to the plus signals, and it's important that you're able to maximize the value of your trade, because there's a lot of money in these trades. Here's your little buy signal in here, and it takes you up to there. Well, there's an easy $1,400 in 1, 2, 3, 4, 5, 6 days. So that's the difference that you're going to get with these plus signals. And remember the automatic reversal. They're not in the signals every day. I expect you can count. There's your T.03 sell. There's an inside bar. 1 day down, 2 days down, you have to buy that high. Next day is an inside bar. You don't count it. It's still 2 days down, and you're buying this high. So you're long again right in here at that high was 137.11. So you're long in here at 137.13. Up into here, this is a plus sell. I've shown you that it was today's trade, and you get a nice little run down and make a bit more money. So that's what these plus signals are all about. They're melding, they're wielding in together the missing parts between the T.03 trades. So do contact Terry, I suggest, and ask him to give you a trial of that. And don't forget that the way we start all of our trading is we look at our longer term analysis, and this is what we call the fourth seal. It's a forecasting service. It's done on time cycles and time frames. Now, most of these charts are the 6-day chart. That's our primary timing cycle. And you can see here, this is the S&P. This is the cocked hat I've been talking to you about, and I'm going to show you the longer term chart as well. But this was what I was writing about in the article. The S&P is in a cocked hat. That's a different timing chart, but it's the same sort of thing. So what were we saying about the S&P? High degree top is building, blah, blah, blah. And this is what he says. We have to stay with what the time cycle has been telling us these past few weeks. And the cycles and four seal levels are on the chart. So we're expecting a correction in this market, but it hasn't come yet on the 6-day chart. But these charts give you a wonderful overview of what the markets are doing. And until you get the turn, you follow the trend. And this trend is just up and up and up. That was the S&P. Let's have a look at natural gas. Pretty interesting. So here's our longer term forecasting on natural gas. This is the 6-day chart. It's shooting down. This red line tells you that that's a fourth seal line. That's very important support there. And guess what? We have 3 time cycles here, 62, 66, and 93. 66 is actually what we call the number on the trine. It's not a number you see very often in futures. It's a number that works very well in stocks. Excuse me, but Frank has obviously added that for some reason. But nonetheless, you can see that the fourth seal is telling you we have another bottoming cycle coming up this time. While this market is at fourth seal support, we should again be on alert for a possible low here. Follow trading protocol to get elected. Okay, so what's the trading protocol? Today we had a plus buy in natural gas. Let's look at the chart, and here's natural gas, and we've just had contract rollover. You see this little R and a diamond here. That's Trade Navigator's way of telling you there's been a contract rollover, and it's gone from the September contract. It's gone from the August contract, I'm sorry, it's now in the September contract. So let's have a look at that. Well, here you are. We were saying look out for a turn, follow trading protocol. We had a plus buy signal today, which was elected, either at the high of the inside bar or this bar. Either one was elected. Possibility is that's a low. We won't know that for a few more days, but at least it's got a turn. And it's 1 day up, which means we have to sell the low. If this market takes out the low of Thursday's bar, you have to be short. The other one I wanted to show you, folks, because I know a lot of you are very interested in it, is gold. And here's our analysis on gold, longer-term analysis. This is where you should start your trading from. Have a good overall picture of what the market is doing. And here is gold. This is the 6-day chart here, and you can see that you've got 70 cycle at the top. That's the heathen cycle, 70. Don't see it so often in gold. 62 is a support cycle, most commonly seen at lows. This is the longer term chart. This is what we're facing here, a rundown and some time support. No fourth seal line on that chart at the moment. And this is what we say about that. Gold's in correction mode, probably remains so until the 62 inflection low. That starts to bite as soon as Wednesday, the 16th. Until then, we should look for sell signals. Well, that was fine. We got a nice sell-off today. Exactly what the fourth seal was warning us about. So that was great. I think that's about all I've got for you here, folks, on these issues. We've got about 8 minutes left and quite a lot of questions. So let me start by running through those with you. Okay. ACTA, on the trade program, which ones are the plus signals? Okay. Let's go to the website, and we start off, these are the T.03 and plus signals. That's what it says at the top, and there are 13 of them, and these are them for today. And then if you go to the trade program, they're in there already. If you've got a subscription or a trial, either way, they're all in there, and you'll see when this opens up. There it is. There are all the signals today. Those are the blue line trades and the plus trades, and everything of the T.03 plus signals. They're in the trade program. Okay, let's see. That's ACTA, my friend. Okay, Babs. How do I learn to maximize the signals only using T1 at the moment? I think he means T.03 at the moment. I've talked about this before, Babs. Let me show you again. What we would do here is we would, let's see, we're talking about the T.03. If we can maximize these signals, basically find a better idea for you. Here's the T.03 signal. We just use the 533 stochastic if you want to run these signals longer. And what we do, you're following the stochastic down. This is a Daniel code stochastic. It's a special stochastic you get with your Daniel code library when you become a Daniel code member. And the one we're interested in is the blue one, which is called the stochastic K. We use a 2-bar trailing stop until the market gets overbought or oversold, and then we go to a 1-bar trailing stop. So Right here, the markets are down. We're short here. Our stop's above this high of this outside bar. Down it goes. Look at the stochastic. It's not oversold yet, so we're still on a 2-bar trailing stop. Now it's oversold. We move to a 1-bar trailing stop. Inside bar, and there was the high of the last bar, was 175.25. And there's the buffer at 175.40, so we're stopped out right there. From down here, same thing, where there's a buy signal in here. That was a buy. There's the inside bar. Carry it forward. You get long here. Look at the stochastic. We've got a 2-bar trailing stop, which means our stop is below the lowest low of the last 2 completed bars, and we don't count inside bars. So when we enter this trade, our stop is below this bar here, which is 07.15. Watching the stochastic, we're still on a 2-bar. We're still on a 2-bar, which means our stop's underneath. When this bar is completed, our stop's under here. We're still on a 2-bar. When that bar is completed there, our stochastic is now at 80.92. So we didn't get stopped out there, but this is now the lowest. This is the bar is the lowest of the last 2 bars. So your stop's underneath that bar, and the low of that bar was 166.60. So you're 2 ticks underneath that. And then up it goes and up it goes. So that's how you maximize your T.03 trades, and that's how we use the stops for the blue line trades. Okay, that's that. Victor, do I use 24-hour charts? No. Victor, the short-term trading has been absolutely revolutionized by Fraxen. I used to use 24-hour charts. I used to use all sorts of times, and I used to actually teach at the tutorials trading using 120-minute bars, 240-minute bars. But the excuse me, the Fraxen has completely revolutionized that. You saw the soybean chart earlier that Sage prepared for us. If you want to trade short term, do, for goodness sakes, get a trial of Fraxen. For those of you who haven't heard about it, it's a short-term trading program, and the computer, actually the server, actually sends the signal direct to your cell phone. So I wanted to get up to date and be a bit modern. I don't actually even own a cell phone. I think they're a bloody curse, but I know that for most people they're a necessity of life. And what this does, the Fraxen, is it sends a text to you saying buy this market or sell that market, and it's nearly instantaneous. Honestly, it's revolutionizing short-term trading, and I've got a lot more to tell you about that, but I can't this week with the time constraints. Now, here's Michelle. Can you show the ES timing chart again? Tier first target. Are there 2 different questions? Michelle wants to see the ES timing chart again. We can pop that up for you easily enough, Michelle. Here it is. So it's a 4th seal under this group of headings here. And this is the 6-day timing chart, and the red lines are 4th seal lines. So you can see on the 6-day chart, this market is still right at that, is still some horrible things beeping at me. I do apologize. You can see it's in that cocked hat that I talked about in that article, S&P and a cocked hat. If you don't understand that, Michelle, have a look at the front page, which is the home or news page, and you can see if you scroll down a little bit, there's a number of recent articles there. This is the one that tells you about cocked hats. Quite interesting. Okay, now here was the second one. Babs wants to know more about first target. I thought I'd covered that, Babs. If not, send me an email, please. Bill, when's my next Taupo seminar? December, Bill. It's usually the second week in December. We'd love to see you there. Akshay. Hello, Akshay. What significance does a BB3 have? Any protocol to keep in mind here? A BB3 just tells you it's the biggest bar in the last three, but it's measured by momentum. Akshay, it's I'm going to take that off the template. It's something we used to use when I was teaching sort of trading off 60-minute, 120-minute bars, and it tells you that that's the bar with the biggest momentum in the last 3 days. So if you were trading shorter term on a 60-minute, 120-minute chart, you have to exercise extra caution if you're trading against the BB3. But as I say, the Frac Zen has really, put all of those sort of types of trading out of business. So we don't worry about it now. And in fact, we'll try and get it taken off. That's that. Okay, Hank, thank you. Oh, we've got it. Okay, we've got the BB3. You've got the T.03 clear. If you haven't, folks, please write to me. I mean, I'm very frustrated for you. To me, all of this stuff is so clear because, I invented it, and it sort of took me 20 years to invent in little bits and pieces. So, it's ingrained in me. I can tell these signals just by looking at charts. But I want you to get to that stage. I mean, if I can't teach you how to do this stuff, if you're not getting the dollar value and the returns out of it, then you'll be frustrated. And I don't want you to be frustrated. I want you to be happy and wealthy and understand that trading's a wonderful life, and that, we've got so many different systems, or a number of different systems at the Daniel Code. There's sure to be one to suit you. Folks, I think that's about it for the day. The hour is up. I thank you very much for your attendance. Any other questions? No, I think we've answered them all. So there we are. So folks, thank you for your attendance. Now, next week, Thursday next week, Frank De Beer, who is our entrant in the Robbins World Cup trading competition, is going to be with us as our special guest, and he's going to talk with me about how he uses the fourth seal and the GMAG trading in his personal trading, and it's very interesting. So I do hope you can join us. Put in your diary, same time next week, and Frank DB will be our special guest, and he'll tell you what he's doing, and I'll talk with him about other opportunities that we can bring to that as well. So that'll be a very interesting program, and I hope you'll be our guest there. So, folks, thanks very much for your attendance. Those of you in the southern part of the world like me, it's just about 11:30 Friday. The week is almost over for me, and must be time for a Bloody Mary, and I'll be thinking of you all. Okay, I'll look forward to seeing you next week, and thank you very much for your attendance. Goodbye.